Hi guys, this is Sushmita, your crypto guide, and today I'll be talking about Ponzi scheme. In 1920s, Charles Ponzi, an Italian swindler, moved to North America and became famous for his money-making fraudulent system. The scheme led victims to believe that profits are coming from legitimate business activity and they remain unaware that other investors are the source of funds. These are basically fraudulent investing activities that work by paying off older investors with money collected from new investors. These fraudulent schemes are usually presented as investment management services where participants believe that the return they will gain is a result of legitimate investment. A Ponzi scheme can run as long as it can maintain the illusion of a sustainable business and new investors contribute new funds, and as long as most of the investors do not demand full repayment and still believe in the non-existent assets they are purported to own. Imposters often lure investors by promising quick and/or high profits, but in reality the fraudster is basically robbing one investor to pay the other. The problem with such a scheme is that investors on the back end will not be paid at all. Most Ponzi schemes share similar characteristics that should be red flags for investors, like high investment returns with little or no risk, overly consistent result, unregistered investments, unlicensed sellers, issued with paperwork, etc. With increasing adoption of cryptocurrency, there has been a rise in the new generation of Ponzi schemes. Often called smart Ponzis, scammers usually develop these Ponzi schemes by misusing ICOs. The anonymity of these transactions makes it difficult to identify and take legal actions against such people. The one-coin Ponzi scheme is considered as the largest financial scam in the history, with its victims losing close to 19 billion USD. And this was all about Ponzi scheme. To know more about such technical terms, do write in our comment section below and do not forget to subscribe to our channel.